When looking at first-time buyer programs, it's important to understand that there is a gamut of options out there. Some of them are available with no form of repayment and no lien on the property. Some of them are just grants, and that is a gift to you. A lot of them do come with some form of repayment, whether it be packed into a higher interest rate or as a second payment, but they make it like an option for you to come in with less cash to close. Now, that's not to say you're necessarily going to have 100% of your closing costs paid. There are programs that you can combine and stack together to make it so that you're really essentially not coming out of pocket. You can ask the seller to pay the closing costs and have the down payment covered by a program, and that will assist you in getting closer to that zero out of pocket. However, there's always the expenses of an inspection, which is optional, however, highly recommended. An appraisal, which the bank requires, the lender will order that, but it will cost you money. And also your earnest money, which will need to be deposited into an escrow account from your funds. So it's not necessarily going to be zero out of pocket, it will be less out of pocket. However, keep in mind it'll come with either a higher rate or maybe a second payment, or it'll be in the form of a grant with neither of those contingencies attached. So there's so many different options out there that you need to keep in mind and understand like what it is that you're qualifying for and shopping and looking for. The one thing that a lot of them do have is an overlay of income. So that will vary depending on your area and also sometimes your occupation. So there will be maximum income limits, and then also they will take a look at your credit score. Now, I do have a program that will provide the down payment. It's an FHA loan. There's a second payment involved. Sometimes there's not. If you have really, really good credit, it'll just be a higher rate. But they are a little higher on the rates. Then they have a second payment. However, if you qualify for this, we can go all the way up to 56% debt to income on FHA. That's debt to income ratio. So that's like a normal FHA loan. And then a lot of those other down payment assistance programs have also debt to income overlays. So this one I'm speaking of has no debt to income overlay, no income overlay. You can have co-borrowers. You can even buy up to 4 units. So if you're looking to buy a fourplex with that 3.5% down on FHA, this program works for that. And there's no income limits. You can actually have as low as a 580 credit score if we can still make it work. So that means it's a good 580. And we'll go over that later, but there are all kinds of down payment assistance programs available, all kinds of first-time home buyer benefits as well. So if you do have your own savings, but you're looking for kind of a way to maximize being a first-time home buyer, let's talk about the conventional loan with 3% down and the reduced mortgage insurance and things like that you can also take advantage of. So I am here for all of your first-time home buyer questions. I'm ready to help you guys out, help you sustain and grow wealth and build a legacy. So let's talk today. Give me a call, give me a text, shoot me an email, send a pigeon, smoke signal, anything. Let's have a conversation about home loans.